How do we get the investors to jump in and feel comfortable? This is hard. This is really the art part of this business, and this business is an art form. I always say that number one, you have to have a deal they can say yes to. That means that it has investor-friendly terms. It's written in a way that's reasonable. You're not making up new-fangled language. You're not coming up with some kind of a crazy off-market, off-Wall Street, non-traditional kind of a deal. So it has to kind of make sense. The attorneys, the accountants for your prospective investors, if they look at it, have to be able to recognize the way that you've set up your terms and the rest of your deals, the way that your fees and things need to be reasonable, and they just need to make sense, and everybody's got to be comfortable with that. So that's the first part. The second part is that you really have to make sure that your investors understand what you're trying to accomplish in this deal. That you're going to buy a building, you're going to rehab the building, you're going to hold the building and keep it for a long time, or you're going to buy it, fix it, sell it, whatever it is that you're going to do. They have to be crystal clear on what it is that they're doing. They also have to enjoy or like or understand the asset class that you're working in. So if you're talking to somebody who doesn't like real estate, don't bother trying to get them to give you money for real estate. You need to understand what they're about, what they're thinking about, what their preferences are, and what their experience and background is. You have to really kind of get to know these people a little bit so you can sell them something that would likely be attractive to them. And finally, once you get them to understand what you're about, how the deal works, what they're about, now you got to try to match that together, and you have to demonstrate that you know what you're doing. That if things go right and they give you the money, that you are somebody who's capable of making this work out. That your track record, your background, and all the things that you've done in your career are going to make you successful. And when you get all of those things pointing in the right direction, and there are not any friction points, and there are not any arrows pointing backwards, in other words, everybody's pointing in the same direction, and there's nothing that's telling a person, well, these things sound good, but this one's really out of whack. If you can get all your ducks lined up so that things are kind of marching in the same direction, there's a very good chance that investors are going to say yes. And you also, of course, have to make sure that the investors have the money, that they're qualified people, that they're going to be accredited if that's what you're looking for, or whatever the parameters are that you've set up. So you really have to qualify hard up front. The better job you do of qualifying people, the more likely you are to get them to say yes after you've shown them all the different things that are going to work out and go their way. So when you do those things, people, they look for these deals. They want to come into your deals. They don't have a lot of great alternatives, and you need to be the best alternative that they have. I very frequently will say that for investors, it's like going to the horse races. They study, they read, they review, they prepare, and ultimately they look at all the different choices they have. They go to the window and they bet on one horse. You need to be that horse. The things you need to line up, again, you present your track record, make sure that the people are right, make sure that your investor-friendly terms are good, your fees, everything is in order, that it's reasonable, and that it's something that people can understand. And as long as you do those things, there's a good chance you're going to succeed in this great business. So go out and stake your claim.